Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's video we're looking at some work through Tastyworks, which is, I think, another excellent brokerage to trade. It's more and more becoming kind of one of my primary places to trade because you can't beat the rates, but another thing that I like about it is that you can look at it and think of it in a way that maybe gives you some new perspectives because you're not always relying on a chart. That's to say that you're looking at things more like what is my IV rank? And of course Amazon definitely in focus as we came into earnings, but what I'm showing here is just filtering out the Amazon trades that we were looking at as we got into the end of the day, what we discussed in the chat room for the first 90 minutes of the cash session today, and how all that looks to play out. So when you look at these situations, some of the first things that you want to note is just how have you positioned yourself. The first orders that I started my way of thinking with was just selling premium, which is to say, let's generate a credit at a strike that you think Amazon will stay above, and then from there we can take that credit and then apply it to some directional butterflies. In this way, I give myself no upside risk because the credit I receive through the sale of the put credit spread will make up for all of the butterflies that I took. So if Amazon were to just explode higher, the risk is still covered by these. As we got into the end of the day, I decided that I liked Amazon a little bit more, so I went ahead and added these on at 15.20 to really just emphasize the idea that, once again, that's a little bit more credit, helping offset the risk that I paid for the butterflies. Now you look at that and say, well, that's all great, provided Amazon moves higher, but you have to acknowledge the opposing side. Well, absolutely, and this is where using the analysis graph of this comes in so handy, because two things that you want to be able to do as an options trader, the first of which, and what I think may be most important, is to be able to look at your inventory or look at your order or look at your trades and know from that the risk that you have on. At the same time, as you get used to this, or if you want a visual representation of that, you can now queue up the addition of this risk graph and you can very clearly see what you have. So if Amazon were to get hammered, you can see, and this just hovers there up there towards the top of this flag, that you can see that if it got hammered, I had $3,000 of risk, which is more than enough for me around earnings. I really don't want to push it. That's generally what I like to risk for my core swing trade ideas. Since I really liked Amazon, I decided to get right up to that. But then what you're also seeing in this risk graph and how the P&L will become staggered, of course the first jump you're seeing is the 1500 put that was sold. The next one that you're seeing is the 1520, and then the peak profit that you're seeing right here is a $1,600 butterfly. Once you've looked at this a couple of times, you'll start to get a better feel for looking at it and saying, okay, there's your long 3 calls, there's the 6 that are short and 3 that are long. Well, that's just your standard butterfly. And then the fact that the 2 plus 1 right there, so the long puts are offset by the short puts, so you know that those are basic verticals, and it just gives you another way of looking at your P&L from a visual perspective while also keeping it in touch here, and that all looks to be pretty solid for Amazon as we head into tomorrow. So an excellent platform and one that I continue to make more use of. This is how it worked out for us on Amazon earnings, and I hope you find that helpful.